Ladies and gentlemen, what you're looking at is the 2-year price chart of the stock ATVI, which is Activision Blizzard, currently trading at $73. If we hike in here looking at the last 1 year, you can see that when this deal was initially announced, Activision Blizzard shot up from an initial $65 per share up to 82 and change. And this leads to where we're at today with the stock slowly trickling down about 10% over the time of this deal. Now, Activision overall has been a growing, long-term profitable company. You see over its quarterly and annual numbers, generally speaking, this company's been producing free cash flow at a steady rate. And with this company growing its long-term revenue, growing its long-term free cash flow, this led Activision to offer to buy out the company at $95 a share. That's what this big jump up was here back in January, a hot 10 months ago, and they offered to buy it at $95 a share. Now, if you look at analysts, they're projecting a slower revenue number here in 2022, but a big pickup next year in a 2023 at 19% revenue growth. And long term, if you look over the last several years here, you can see that last year they grew 8%. Over the last 2 years, they've grown 16% compounded, about 6% over the last 5 years, and then 6% over the last 10, and that's compounded numbers, of course. Now, I did see this article a long time ago, way like 6, 7, 8 months ago, right after this deal was announced, that Warren Buffett acquired almost 10% of the entire company's stock because it is going to do a merger arbitrage bet. We're going to talk in this video how this deal is perfect for not only Microsoft, but Activision as well, in my opinion. If I were the owner of Activision Blizzard and I were strictly making a business decision, not just to make a stock price go up, but the actual fundamental business itself, I think that these two colliding into the new Xbox Game Pass is perfect. I think it's going to bring lots of new subscription revenue for Activision Blizzard and Xbox if this deal goes through, because Activision has many exclusive, awesome game deals like StarCraft, Overwatch, Diablo, Call of Duty, World of Warcraft, Candy Crush, Tony Hawk's Pro Skater, and then Crash, and many others that are not included. And when you get both of these teams working together, they're going to dominate the gaming world. They've already made previous gaming acquisitions as well, like Xbox acquiring Minecraft, for example, and I think that they're just getting started. And so I think that with Blizzard already being a very profitable company, with having great cash metrics, which we'll talk about in a second, I think it's a great opportunity for both of these companies to thrive. So we're going to talk about in this video why I'm considering following Buffett in this trade, in this arbitrage bet, because with the company trading at 73 as of today's closing price, and the deal projected to be closed at 95 a share, that is an opportunity to make about 30% on your money based on today's price if the deal were to close. There's a risk that the stock will go down if it does not close, but we're going to talk in this video why I'm considering buying into this stock. Thank you guys so much for watching. If you haven't seen me before, my name's Jordan, a millennial investor. My portfolio balance as of today is around $40,000. And if you want to see my balance since starting YouTube, it's right here, as well as my current holdings and my growth portfolio and my performance since 2022 compared versus the major indexes. So thank you guys for tuning in, and without further ado, let's go ahead and look at Activision Blizzard. Now, like I said, this company has been growing its revenue long term. It's been using its game franchises to grow revenue via mobile games and console and PC games. Now, profitability has followed along suit. It's been growing at a steady clip, actually outpacing that over the last decade, growing at a compounded 10.25% rate, which is very good. And the reason why Berkshire is trying to buy this is because, in my opinion, I think that he thinks that this company is not too overvalued either way. So the thing is, if we go back here and we go to M1 Finance and we look at where the stock price was before the deal was announced, the day before it was announced, the price was $65 a share. So let's just use some common sense here. Okay, the stock was trading around 50, 65, somewhere around there, right before this deal was announced. So it'd be safe to say that if the deal were to fall through, it would likely be that this company would go back down to around the $60 a share range, okay? Now everyone, if you pull out your calculators here and you divide 60 divided by 73, you would see that the company's share price would have to fall about 18% based on where we're at today, okay? Now let's go ahead and take your calculators again and divide 95 by 73. That means the company stock price would have to go up 30% if the deal were to close at $95 a share. Now, using common sense here, if the stock were to drop based on where it was before, that's about 18% downside. And if the stock were to go through closing this deal, that'd be about 30% upside. So let's just use some common logic here. Do we think that the deal will go through? In my opinion, I think it will get approved. But the cool part is that even if it doesn't, even if the stock does drop off the back of this deal, The downside, in my opinion, is not that far. So it's a risk-adjusted trade that is honestly in your favor. It's more than likely a coin flip. A coin flip would generally be like going to a roulette table, and if you bet on black, say if you bet $100, if you lose $100. If you win $100. That's not the case with this. The odds are in your favor. With it closing at 95, there's about 30% upside. With it dropping, there's around 18% downside based on where the stock was at before the deal was announced. Now, it could drop lower. It could actually not even drop as much. We don't know the actual price that it would go to, but just based on historical metrics, that's probably somewhere in the ballpark where we'll be at. So Berkshire is probably looking this at a pretty awesome opportunity to have an awesome risk-adjusted bet, and his own comments were, occasionally I'll see an arbitrage deal and do it. Occasionally it looks like the odds are in our favor, but absolutely we can lose money on that company, fairly large sums of money, depending on what happens if the deal blows up. But if the deal goes through, we can make some money, and if the deal doesn't go through, who knows what happens. And then following up, lastly, what he said about this, he said, we don't know what the Adjustment Department will do, we don't know what the EU will do, and we don't know what the other 30 jurisdictions will do. One thing we do know is that Microsoft has the money. And he's absolutely correct in this, because if we pull up Microsoft's cash balance as of the most recent quarter, you can see that their cash currently sat at $104 billion. They have plenty of money. Actually, that's the annual chart. Let's go ahead and get the most recent quarterly update. This is quarter over quarter. My apologies. They have $107 billion. So they have plenty of money on the balance sheet. They could easily buy out Activision and start reaping the rewards of the cash flow that Activision already generates, and they could start reaping some of the rewards of that profitability sector. Now, the main thing that Xbox, and specifically Microsoft, who owns Xbox, is trying to do is grow its Game Pass, which is currently selling for $10 a month. And there's different plans here and different types of products that you can sign up for on the monthly subscription basis. And you could read over this, pause over if you want to read it. But basically, long story short, you pay $10 a month and you get access to lots of games you wouldn't have otherwise. What types of games? Well, let me just briefly scroll through, and this is not all of them, but these are the type of games that are currently active if you're paying that $10 a month that you can play every single day as long as you're paying that monthly $10 subscription. Now, why is Xbox, and more specifically Microsoft, want to buy a company like Activision? Well, imagine if they could throw in that $10 Game Pass companies like this, specifically some of the really, really big ones like an Overwatch, like a Call of Duty, like a Candy Crush, which I know is more so a mobile game, but you get the point. If they could advertise these games and these brands as their own, I think that this would bring a lot of value for Microsoft. And I think that right now, if you look at where Activision's today, like I said, they're currently producing around $2 billion a year in free cash flow. I think if they were to merge forces with Microsoft, I think that this company would not be doing $2 billion in free cash flow. I think it's very likely that this company could start doing $3 billion, $4 billion in free cash flow using the power, the money, the dominance, the brand recognition of Microsoft. And if you look at these titles, they look impressive, but when you look at Activision plus Xbox's main dominant titles, it becomes pretty apparent at how incredible these two could look together. Some of these big names. Now, I know that you're watching this, some of you are video gamers, some of you aren't, but if you're not familiar, if you don't play video games, many of these on here are some of the biggest games in the planet. These are some of the most dominant, sought-after games, and including, by the way, side note, the new Call of Duty. Every single person I talk to that's my age or even close to it, which I'm 23 by the way, those of you that don't know, anybody that I know that talks anything about Call of Duty has been saying the new one has been exploding in popularity way more than the last few. And this is a profitable company already. And I want to talk about how this company is already producing big profits. And if you look here, the division of Activision is operating at 38% margins. The division for Activision under Blizzard is 38% margins as well. Their King division is currently operating at 46, almost 50% margins. So this is already a profitable company. So that's the best part here, is that even if Microsoft does not close on this deal, this company is already very profitable. What I want to show here is the cash and debt. Look at this company's debt that's been pretty much flat over the last decade. They've been pretty much staying flat at this $3 billion rate. Now, if you look at their cash pile, what has their cash pile been doing? Ever since 2019, it's over doubled. You see that it's higher and higher quarter after quarter, and the most recent cash pile is 10.69 billion. Even if you subtract the long-term debt out of this, out of 3.6 billion, they have a net cash position of about 7 billion, which is currently over 10% of the entire company's market cap at 57.5. So this is a company that does not trade at a crazy valuation, generating 2+ billion in free cash flow every single year for under a $60 billion market cap. They don't really dilute shareholders that bad. Shares only went up 0.5%, which is almost nothing in my opinion. Speaking of which, the stock-based comp, if you compare it on a year-over-year basis, what they're paying out their executives compared to the free cash flow is minimal. You see 2.33 billion in free cash flow versus stock-based comp of 500 million, not even close. And this company's still growing revenues, and they're expected in the most recent quarter to grow 28% year over year. So overall, I think it's a great company. I think it's an opportunity for Microsoft to really dominate with its Xbox Gaming Pass. And the reason why I'm considering investing in this is because when you look at this, it has 30% upside and only about 18% downside. What would really be interesting for me is, like the other day when I wasn't really paying attention to this just came across my radar, it almost dropped below 70. If we could get this share price to $70 or even below that to 69, 68, I think that's when the value opportunity would really become apparent, because the downside would get smaller and smaller and the upside would get bigger and bigger. And if you think Microsoft is going to close on this deal, which I do, then I think it's pretty much a shoo-in to buy the stock for a free arbitrage play. Obviously, this deal has risks. Do your own research, do your own due diligence. But in my opinion, if the stock drops to 70 below, I'll probably be buying the stock. Thank you guys so much for watching. I appreciate you watching all the way to the end. Check out all the stuff down below in the description to get signed up with them on Finance if you haven't already. My name is Jordan. I'm a millennial investor, and I'll catch you guys next time.